UPS, meantime, out with its second quarter results this morning. Joining us now to break down the report, Jonathan Chappell, the transportation analyst at Evercore ISI. Jonathan, great to have you with us.
Thanks, Melissa.
Weakness in e-commerce, was that the main culprit here?
That was one of the culprits. I mean, we have to have a macro read-through and a micro read-through here. On the international side, revenue was down 13%. I think that was a pretty, e-commerce, global economy, Asia weakness type macro read-through. But on the domestic side, volumes were down 9.9%, which was tied much more, I think, to the uncertainty regarding the Teamsters negotiation that went up right until effectively the last minute into late July. So international, macro read-through, e-commerce, probably a little bit of demand softness in the U.S. and domestic, but I think that was really more specific to UPS and what they had to deal with the Teamsters negotiation up until 2 weeks ago.
Do you think you'll get some clarity or visibility on what that new deal will cost UPS?
I think we'll get some, but what's really interesting about the timing here is UPS pushed their earnings back 2 weeks in order to get the deal across the finish line. But the way that the vote works is the rank and file has until August 22nd to vote on the deal. Now, the locals Teamsters leaders voted 161-1 in favor of the deal. So it seems like it should be done. However, you never know how the rank and file. So I think UPS has to be a little bit guarded with how they kind of portray this deal, how they talk about pricing, how they talk about getting share back, any of the positive productivity offsets, et cetera, until the vote is finalized on August 22nd.
Is there still a possibility of a strike?
I don't think so, but, it's never done until it's done. So 161-1 is pretty, consensus as far as the leaders are concerned. I just think you never know until the final votes are in.
Yep. In terms of UPS versus FedEx, how do they look comparatively? FedEx is falling in sympathy this morning.
Yeah, they are falling in sympathy, which is not too unexpected, but I think the outlooks are very different here. On the one hand, you have, this labor negotiation with UPS, which was a distraction. They clearly lost share. I think FedEx was a temporary beneficiary of that. Then you have a much higher cost inflation set up for the next 5 years as this Teamsters deal is implemented. FedEx, on the other hand, is working through cost restructuring. After, they're talked about restructuring and merging the ground and the express businesses. So there's a lot of costs that FedEx can take out of the business. Now, I think the real benefit here for FedEx is UPS is going to have to raise prices to offset a lot of this labor inflation. And what we're hearing in the market as recently as late last week is they're going to customers and talking about high single-digit to low double-digit pricing increases. Again, I'm not 100% sure we're going to get confirmation on that in the call in 45 minutes. However, if that does happen, FedEx is perfectly positioned to ride the coattails, move their pricing up at a similar magnitude, and have their costs moving in the opposite direction. So I really do think this is a beneficial outlook for FedEx, no matter how you cut it.
What is your top question for that call when it does start?
I would like to know what the sustainable margins are going to look like in the domestic going forward. They lowered their full company operating margin guidance by 100 basis points. They actually beat in the second quarter, so you have to take that into consideration. So the real second half outlook is by more than 100 basis points, along with the $4 billion revenue guide down. So the question is going to be, as you integrate this new Teamsters contract, this cost inflation, which is higher in year one and is tempered a little bit, but still above kind of, I think, core inflation for years 2 through 5, what's the pricing outlook going to be there? And can you get back to the margins that you'd had in the recent past because of the pricing dynamic and your ability to win back some of the share that you lost during this period of uncertainty?